Kitco Mining's special coverage of the Precious Metal Summit is brought to you by Newcore Gold.
Newcore Gold has skin in the game, with management holding a 20% stake in the company. I'm with Luke Alexander, CEO. Luke, welcome back to Kitco.
Yeah, thanks for having me, Michael.
Newcore is ticker NCAU on the TSX Venture. Luke, what's Newcore focused on?
We're focused on the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by robust economics that we put out within a 2021 PEA. It's backed by a management team who, as you mentioned, do have skin in the game. We own 20% of the company, and that's money that we've invested alongside investors in our most recent financing in June. The management team and board participated in that alongside investors, and it's supported by a very strong shareholder list. We're currently 45% institutionally owned, with a number of deep-pocketed tier one mining-focused investors who recognize the district scale potential of our Enchi project in Ghana.
Now, you recently filed a mineral resource estimate. What were some of the highlights?
Yeah, so we filed that earlier this year, and there's a number of positives that came out of that. One is we put out our first ever indicated resource on the project, so about 740,000 ounces of gold. So that's the first time ever that we put an indicated resource out, which is another milestone in terms of de-risking the ounces that are in the ground. We also added to that inferred ounces, about 970,000 ounces of inferred resource. So that grew the overall size of the resource from the one that we previously put out. We also put out our first ever underground resource as part of that, so about 136,000 ounces. So as many as you would know, and many of your viewers would know, that is not an underground mine today, but what it is a proof of concept. If you look at the Sefwi-Bibiani belt where our deposit sits, we've got a number of 5 million ounce plus deposits, and where you see a lot of those grow in size and increase in grade is as you start to drill deeper and get into the sulfides and the underground potential of those projects. The average vertical depth of the pits today on our project is only about 70 meters, so we've really just scratched the surface. And that 136,000 ounces of underground resources, again, a proof of concept that we do have much larger resource beneath the pits that we've currently outlined. We also added a fifth resource area at an area called Tokasea. So that shows, again, the district scale upside potential of the project. We have identified 25 targets across the project. So the fact that only 5 of them represent our resource today, again, highlights that exploration potential. So growing the overall size of the resource, adding underground ounces for the first ever time, and adding a fifth resource area would be the key things that came out of that update that we put out. Now,
you're located in Ghana. What's the political situation?
So Ghana is a tier one jurisdiction to be operating in. It's obviously in West Africa, very safe from a security perspective, very good, political environment in country. But one of the things that we always talk about with investors and others is look at the companies that are operating in Ghana. You've currently got 3 of the top 10 largest gold producers with significant operations in country. You've got Newmont, Goldfields, Anglo. All of these companies have the ability to allocate capital anywhere in the world, and where they've allocated large portions of that capital is in Ghana. Newmont, for example, they're investing another $1 billion into Ghana. That's on their Ahafo project, which sits to the north of us on the Sefwi-Bibiani belt, sits at about 20 million ounces, and they're expanding the overall size of that operation. It'll take them from roughly 14 to 20% of global production coming from Ghana. So it truly is a tier one jurisdiction, and that's also seen in the amount of M&A activity that we've seen in country over the last number of years, with lots of mid-caps and majors wanting to get into Ghana because it's recognized as such a favorable jurisdiction.
What's the infrastructure like?
Very good infrastructure. So our project has a paved road that goes right through the middle of it, power line running beside that, half dozen gas stations throughout the project. So very easy for us to access the project. And if you look at our 2021 PEA, that really comes to the forefront in terms of the overall capital required for the project. The fact that we do have such good infrastructure really helps from a CapEx perspective.
Now, you talked previously about discoveries and growing the resource. You do make a highlight being at district scale. What is this and why is it important?
So if you look at the overall size of our land package, again, we're on the Sefwi-Bibiani belt. To the north of us, you've got Chirano at 5.5 million ounce endowment, Bibiani at 6.5, and then that Newmont, a Ahafo mine that I talk about at 20 million ounces. So very large deposits along trend from us. Our project from the north to the south is about 40 kilometers in length. 216 square kilometers in size. And where the mineralization sits on our deposit and others along the greenstone hosted belt is you get these second and third order splays coming off of it. If you look at the total strike length of all of that, it's about 100 kilometers of structures going through our project. And that's why we talk about it being a district scale exploration project, is because there are so many targets for us to focus on. And the fact that we've got resource coming from only 5 of the 25 targets that we've identified to date, and the fact that our resource sits, the resource we've got today sits within 70 meters of surface, again, highlights the big exploration upside that we've got across the project, as well as at depth on the project.
Are you funded?
Yeah, so we raised at the end of June $5 million. So we run a very low G&A for the company. So that money will take us right through 2024. Management and board, again, we participated in that financing. So we're funded to complete all of the work that we want to get done on the project over the next year and a half or so.
What's the share structure like?
It's a good share structure. We currently have about 170 million shares outstanding. As you mentioned, or asked about, a little over 5 million, about $5.5 million in the bank. One of the things that's, I think, unique for our company is we do have a very strong institutional backing for a company like ours at a $20 million Canadian market cap, 45% institutional ownership is something rare. We've got Franklin Templeton as our largest investor at about 10%. Ruffer, Merck, SSI, Aegis, these are household names, groups that look for district scale projects, look for management teams to back, and they've decided to invest in Newcore. So good capital structure from that perspective, and good backing from institutional shareholders, as well as the capital markets. We've got a couple of investment banks who cover us from a research perspective as well.
Well, you would know all about research. You come from a finance background. Now, Luke, there's close to 1,000 listed mining companies on the TSX Venture alone. You've analyzed a lot of companies in the past. You provided financing for companies a lot in the past. What are some of the key characteristics where you have a company that has like a good outcome?
I think, management team and management team and board. I think at the end of the day, strong teams ultimately find good assets and also are able to find funding to move those assets forward. I mean, those are critical elements in terms of a successful company, is having the asset and the ability to fund it and push it forward. So that would be, one of the things that I would highlight. Jurisdiction is a key ingredient as well. I mean, you can have a great asset, but if it's not in a good jurisdiction, you're always going to be plagued with the challenges of funding it and potentially moving it forward, as well as commodity. I mean, we're obviously in the gold business, and we see a very robust environment for the gold price in the coming years. So, team, jurisdiction, and commodity, I think, would be 3 of the key things that I would focus on in terms of characteristics that are that successful companies have.
Gold price is not bad right now. It seems like we've settled in about the $1,900 ounce range as well. But it's been tough a little bit for the juniors to kind of catch up and kind of get a win from that as well too. What's kind of the smartest analysis? What is this kind of thing that you've heard around precious metals and the sector, you think, and how things are going to play out?
I think the sector as a whole, I think part of the reason it's been a challenging environment is, the mid caps and majors have performed relatively well. But but they haven't necessarily performed as well as they did the last time we saw gold at $2,000. So I think we've seen margin compression in the sector. Obviously, the world as a whole, regardless of what sector you're involved in, has seen inflation across the board, and the mining sector has seen quite a bit of inflation over the last 2 or 3 years. We've probably seen all-in sustaining costs go up anywhere from $200 to $300 across the board. So we've seen margin compression in terms of the margins that the producing companies are earning today relative to 2 or 3 years ago. As we see the gold price, start to move higher, as well as I think we've seen peak inflation in a lot of areas within the mining sector, we'll start to see margin expansion again, and that ultimately will create a lot of value for shareholders. And typically we see the waterfall effect where the seniors do well, which then moves into the mid cap and moves into the exploration companies. For a company like ours, one of the real advantages we have is the fact that we've got a very low capex project at Enchi, and the flexibility to move the number of ounces that we produce up or down based on the amount of capital that's potentially available. A heap leach project, it's very easy to scale up or down depending on what size project we want to build. And if we look at the 2021 PEA that we put out, $100 million of capex for 100,000 ounces of production at an $1,850 gold price for roughly $300 million NPV. So $100 million, 100,000 ounces of production for an NPV of $300 million. That's a very attractive project, and it's something that a company of our size can move forward, can develop, and can realistically build. And that's a real differentiator for us.
Lastly, milestones over the next 12 months, Luke.
So over the next 12 months, we're focused on continuing to de-risk the project. We announced in early September that we will be doing an updated PEA. So on the back of the resource that we talked about at the start of this interview, we have internally looked at that resource. We've looked at the costs in 2023, what it would cost to build, what it would cost to produce, and we see a very robust project there. So we are going to look at updating those numbers to 2023, and it'll most likely be completed in the first half of 2024, so call it 2024 numbers. But we see that as a way of demonstrating the true economics of this project, and it's another step forward in terms of de-risking it. We have completed a lot of MET work on the project, an environmental baseline study on the project. These are all key milestones to push a project forward. And in terms of things so the PEA is one thing that we're going to focus on completing, as well as additional MET work on the project. If you look in August, we put out additional drill results on the project. That also included some MET work on the sulfide material, so the deeper, higher grade material that we've talked about. So we're going to continue to look to do work on that, because that's something that's important for a number of the corporates out there who are interested in the district scale project that we've got. But also within the oxide and transitional material, we'll continue to work on those ounces, and then we'll look at doing some additional drilling on the project as well. So those are a number of things that we'll focus on over the next 6 to 12 months.
Luke, good luck with it all.
Thank you very much, Michael.
My name is Michael McCrae on behalf of Kitco Mining here at Precious Metal Summit in Beaver Creek.
Kitco Mining's special coverage of the Precious Metal Summit is brought to you by Newcore Gold.